Hey guys, girls, ladies and gentlemen. This is Avi Harkishan from AH Charts. Good evening. Today is April 12th, 2026. This is our weekly update for the entire market. So we're going to look at the indexes, SPY, QQQ, IWM, VIX, and what's not. The indexes that tend to gauge the market. So let's look at that first, and then we're going to jump into a few stocks. That's the agenda, how I want to do this. So let's go ahead and let's take a look at VIX first. Matter of fact, because VIX is one of my leading indicators that I like to look at whenever I'm trading the market, because it could tell me a lot about what's really going on with the overall market, especially if I'm trading SPY or QQQ or IWM. I like to look at VIX as a leading indicator because I trade a lot of zero DTEs and I don't trade zero DTEs unless I'm looking at VIX. So let's take a look at the 4 hour chart. So before I look at the 4 hour charts, let me see if I could switch over to the daily chart first. So this is VIX daily chart. One of the key levels I was looking at before is this 2183 and 2044. Price has gotten above it, and we were rejecting around 27.94 to $30 mostly. And key area here that was acting as resistance before is this 2044 2183. Price has broken up above that, and it was finding support at that level over here. As of Friday, price has broken below that level. So because price is broken below that level, I switched it back over to a resistance level, because once price got above resistance becomes support if it's being retested and held. In this case, it has broken below it again, and now we're targeting. It has also broken below this uptrend line that we have here, that I have here. So now the area that we're looking at is this area here, which is this demand area between 1870 and 1774. If whenever you're trading the market, the way I use VIX is that the way VIX work is these supply zones and these demand zones that you see. Whenever you're seeing a supply zones, that's where you tend to see puts being sold off and calls being bought for the market. That's really what it means, because VIX uses options to. I'm trying to explain this the way you understand it. VIX uses the option, the volatility in the option market, and so forth. So whenever you're thinking of using VIX, you think of these levels here, these resistance levels, as where institutions are like, okay, we're gonna go long the market and we're gonna start selling puts and we're gonna start buying calls. That's really what it is. So if there were long calls here on VIX, they're going to start selling those calls and buying puts on VIX, which means they're going to be doing the opposite, because VIX is a inverse relationship to the overall market. So that's the way I like to use VIX, because if I'm trying to time my trade on SPY or QQQ, and if I want to go short QQQ or SPY, I want to make sure that VIX is at a demand level where, because of the inverse relationship, I want to make sure VIX is at a demand level where there's some sort of bounce that you see on VIX. Because if VIX start bouncing, the market itself will start to give some sort of retracement. So the way I look at it for confluences is, if VIX is at a demand or a support level, I want to make sure the SPY, QQ, or IWM is at a resistance level, is not at some random levels on a chart. I want to make sure that my risk to reward is good if I'm taking a trade. I'm not going to get every trade perfect, but I want to make sure I'm doing everything on my part to make sure that win rate or probability of winning that trade is over 50% or somewhere around 60%. So that's the way I use VIX, because of that inverse relationship. If I'm going short the market, I want to make sure VIX is at a demand or a support level. And if I'm going long the market, I want to make sure VIX is at a supply zone or a resistance level where we tend to see rejections. So I'm kind of timing my trade more effectively that way, because when you're trading zero DTEs, you better be right on the timing of your trade. You could be right in the trend of where the trade is going, but if you're off even a little bit with the timing, and the SPY or QQ move against you even by $1 or 50 cents or whatever the case is, that kind of costs you. That will probably hit your stop loss, depends on how much percent your stop is. So timing is everything, and that is why I like to look at VIX. Now, that's how I approach the market, one of my ways of approaching the market. So now, going into tomorrow session, which is going to be April 13th, one of the things that I am looking at here is that VIX has broken a key level that I have, which now has flipped into a supply zone or resistance level, which is 2044 to 2183. So I will be looking at that level here, and VIX has broken the uptrend. Now, the second thing I will be looking at here is that VIX is approaching a demand zone, which means I could expect some sort of bounce, which we saw right over here. This is a key level here, and at this level, I could expect VIX to have some sort of bounce at this level. So I will be paying attention when VIX come down within this level. And if VIX is at this level, that is not a level I want to go ahead and jump into a short position for SPY or QQQ. I want to pay attention to what's going on, because if anything, VIX should come down to this level here, and you can see a bounce back to retest this 2183, and a decision will be made whether VIX is going to come back down and just consolidate within this level, or is going to continue to move up or not, or is going to continue to break to the downside. Nobody knows, but at least I will be paying attention to what VIX does over here. So going into this week, I could expect some sort of move that finds support here and move back. If VIX start breaking this demand zone of 1774, the next level we were looking at here is going to be anywhere between 1774 down to 1462 to 14 something. So probably the level I would most likely be interested in if VIX breaks that level is most likely going to be around this key level over here, which is around 15 16 50 $16 to 1564's level. I would be looking for, if VIX start rejecting this 1774, I'll be looking for VIX to come down within this key level over here. That's VIX. Let's take a look at SPY. Okay, so overall for SPY, we're currently, here is a level that has flipped. So again, whenever a demand level has flipped, price is broken below, and a demand level, price is broken below a demand level, and that demand level has been retested, and price reject that demand level and continue to move lower, that demand level will now switch to a supply zone or resistance level. So what we're seeing is that this level here was acting as a demand level for SPY, and we broke below this level here, and we got back up and we reject this level, and then we continue to sell off really hard. Now we're back up to this level over here again, and we're just above this level. But one of the things that actually concerning me, or concerns me going into this week, is that we have a gap, and more likely than not, these gaps tend to get filled. And one of the other things is that at the top here is where we saw a lot of the selling pressure happening. This is where a lot of the major distribution was taking place before the sell-off, and you can see it here at this level here. There's a lot of distribution taking place. So where would I be looking at going into this week for some sort of reaction? Right at this level over here. So I will be looking for some sort of reaction within this level here going into this week. If we start breaking down with this level here, but if we start rejecting this level here, I think we're going to fill this gap, especially if you break below this 50-day moving average. So this is a key level. If you start moving above this level here, which is around this 679 area, the next key level I will be looking at is 689 for some sort of rejection. So you can see, I don't know what the market's going to do when we open, but it's very likely we may see some selling this week. At least, probably I would want to see this gap get filled. So you can see some sort of retracement this week. So something like, if I don't know what the market's going to do when we open, but either the market is going to move down, or we could see either we move, or we do something like go up this here and we get rejected and we come down back, We retest this level here, somewhere around here. We move back up and we come back and we fill this gap. So I am looking for something along this line here, but something where price is between this level. So we'll see what the market does when the market opens, but there's some news about Iran war is still going on. I thought the war is over, but it's still going on. But anyways, this is the key level. And I want to use SPY and QQQ because at the end of the day, look, the overall market, whether you're trading AMD, Amazon, Meta, Microsoft, more than likely, if SPY and QQQ are selling, the rest of them are going to sell as well. So this will be your leading indicator. So again, key level here, not a place you want to go long. Obviously, this could continue to push up to the upside and continue to break the new all-time high. Unlikely I see that happening. I do see over here get tested and maybe this gap gets filled at least. One of the other things I'm looking at is if you pay attention to this level over here. I kind of marked that wrong. Okay, let's look at this volume right here. See that volume over here? This was right over here. That was a hanging man right over here. So we gapped up on increased volume on a hanging man. Then what you saw over here was very little volume compared to this one here. So hanging man tend to signify when it's at the top of a trend, expect some selling incoming or expect some sort of retracement that's incoming. So you had a gap up over here, and then the next day you had some upside with very little volume, and then you had the candles are becoming smaller. So you had a bit more selling, not much volume on top here, not much interest. But the volume, the candles are becoming smaller, so you want to pay attention as it is compressing at the top there, because more than likely you start seeing some sort of rollover or something like that happening. So not a place I would go long. At least I want to wait for a reaction, see what's going on, and see whether or not it makes sense to go long or go short. For me right now, the risk to reward going short is better for a retracement to fill this gap over here. That's what I personally think may happen. This here, this gap up right there. So yeah, I will be looking for reaction this level here. If you start breaking back and you're closing below this key level of 675, that's where I think you're going to fill this gap, because this level here was acting as demand and you broke below it, rejected right here, especially. Let me get this, where you reject it right here and you continue to sell. So you broke down, retest, reject, sell. So now you're back above that level. So if you come up here, you roll over, grab liquidity, come back, retest, you continue to sell, see selling again. So this level I'm looking at. That's for SPY. Let's move on to QQQ. So on QQQ, I'm looking at the same thing as well. Not much difference. We are above that 200-day moving average. We are above that 50-day moving average. So not the most bearish thing, but not a place you want to go long, because now you broke down, you're retesting key resistance level. This is where you saw some selling coming in right over here. So where I expect to see some selling happening again is you're retesting this key resistance area here. And as you see the selling volume where you saw some distribution taking place right at this level over here. Let me remove this now. All right, so 622 to 617, where you saw a lot of the distribution take place. Now, here you go again. This level, act as support. You broke down, went back up again, acted as support, but then you finally break down. You retest the level. You retested 3 times, matter of fact, before you finally give out, and you broke down. No, QQQ is retesting that same level again. So it's not a level I want to go long the market when you're retesting a major supply zone, which was prior demand zone. There's a lot of distribution on top, and you broke down. So here is where I expect some sort of reaction and to see this gap gets filled at the bottom here. So some things that could happen is that we could see a reaction right here that's filled this gap where we move down. and we fill this gap here, or we even come down here. But I want to see this gap gets filled at least. The other thing that you can see is that you might see some sort of thing like this come up, grab liquidity, and that's when you fill this gap. Don't know which one it's going to be, but I think it's very likely you're going to fill this gap, and I don't think you're going to start randomly breaking to the upside. If you do move to the upside and you come down here, you fill this gap, then you could probably start pushing up again. It's possible for the summer. It's possible, but not a place I want to go long. If anything, I would be looking for some sort of reaction up here to see any short position to come back down and retest this level here, which acted as demand right here. They were acting as demand until you broke down again. Here's where you broke this level, retest. You start selling. Now you broke this other level over here that was acting as demand because you were in that range. So this was an entire range that you were trading in, that QQQ was trading in, and it finally broke that range, retested that range right over here. You retested that range and you broke down. So now you're back up and you went above that level, and now you're testing another supply zone. So I will be looking at this level here all the way up to 622. If you break above this level, then your next resistance anywhere between the 617 to 630 area, where I expect to see some sort of pullback or so. But this is your level going into this week, this 613 to 617 level. Let's take a look at IWM. So with IWM, you have this trend right over here. This trend is what I will be focusing on to see whether or not you're rejecting this trend. This level here is currently acting as support. You do have a gap. So there's been a lot of gaps created. Again, for QQQ, SPY, and IWM, I'm seeing the same thing where you have this bigger volume candle over here, which is like a hanging man in a way. Then you have very little volume traded at this this area right over here in this candle. Then you have one more green. So it's like it's starting to compress to the top there. So you're kind of looking for either a buyer stepping in and push this up a little more, grab liquidity and roll back down to fill this gap, or you just start breaking back down and fill this gap, whatever the case is. But I will be looking at this trend line, this resistance trend line right here. If we stay above this level, then I will be looking at 266 level here for IWM. But this is a level where it's like I'm not willing to go long at anything. I want to see reaction first on what's really going on. As you can see, this level here, this is where a lot of distribution taking place. So absolutely not a level I want to go long. Absolutely not. This is where I want to see some sort of reaction to fill these gaps at the bottom here, maybe retest this level here. So yes, so a lot of resistance are being hit this week. So just be careful. Don't chase anything. It's a very news-driven market. So it could go up, down. It could go anyways. Who knows? Whatever Trump tweets. I don't know what he's going to say. Because be very positive that we have a deal. There's peace everywhere. You can say, okay, wonderful. There's peace. We have a deal. And then 5 minutes later, there could be another tweet that says, there's no deal. And the market's just going to drop. It's going to rip. So I don't know. So just be very careful. I'm not really much swinging any position now. I rather day trade, take whatever winnings I have, and go sleep probably at night, unless I see something major happening with the analysis, with my analysis where I want to swing any positions. Well, let's look at GDX. GDX is gold miners ETF, which really tracks gold. So what I'm looking at for GDX is that GDX broke down here from this megaphone pattern broadening wedge right into our blue box. You saw the reaction, and now it's back into one of our sell zones. So I'm going to move over to the 4-hour candle because it gives me a cleaner look. So within the 4-hour candle, the 4-hour chart, we're back, and you use the fib from the top here all the way to the bottom. You're in that area, that 618 level, where you tend to see some sort of selling happening. So GDX1 I'm paying attention to because you're back within this range here where you tend to see some sort of selling take place. This entire level right here. So GDX could experience any sort of selling within this area and come back down to retest $82 or 85 to 82. So pretty much have a decent setup in a way. Wave 1, 2, 3, 4, 5. So you can see 5 wave to the upside already, or you could get one more and then that break. But it's heading into a nice setup for some retracements to take a look at GDX. What's possible is that if you're looking at GDX and you're looking at gold at the same time, gold is coming back around this area here. Start from here. Same thing here, that 618, where you saw some sort of reaction, demand flip resistance. So you're back at a demand flip resistance, which is around 458 area. So gold could still see some upside unless you have a break over here, because you do have this level here too, where you could see some sort of rejection over here and you break to the downside. If this is the case and gold does not make push to make one more high to reject here, then and you start breaking over here, then I expect GDX to also reject at this level here and not go up a little bit more before break. So GDX will break at the same time. So pretty nice setup on both gold and GDX. Expect some sort of reaction on gold for a pullback within this area here, which is 444 to 458. I know it's a big level, but what I'm looking at here again on gold, I'm on the 2-hour chart in gold, is you start to see that bearish MACD divergence and that bearish RSI divergence starting to form. So you're starting to see that form, which tend to form at the end of a wave 5, when there's about to be some sort of pullback. So you're seeing that starting to form now. And if you look at GDX as well, you're seeing that on the 2 hours, you're seeing that bearish MACD and RSI divergence forming. So there's a retracement coming, and I'm paying attention to this one because when GDX pull back or gold, you tend to see like a 6% or so. Sometimes it's 6% in a day, 5% a day. So it might be a good risk to reward trade. If I see it start coming up here, I may start taking a position where I'm going to swing trade GDX or gold, probably GDX. So that's what I'm looking at for the ETF. Okay, let's look at some stocks really fast. This is Apple. Apple has completed a 5-wave move to the upside, completed an ABC retracement to the downside. Is it possible Apple to continue making newer lows? Yeah, it's possible. Right now, I'm looking at for Apple. Apple is currently retesting this all-time high level over here, previous all-time high. So you're right at this level over here, which is a major level where sometimes you can see some sort of a pullback, some sort of retracement taking place on Apple. So major level here I'm looking at for Apple is right at this 260 level over here. Once you could start holding this level, definitely you could see Apple start moving the upside. One thing I'm looking at for Apple on the 4-hour chart is this rounding bottom. Let me just move to the 4-hour. Give me a sec. Yeah, you have this rounding bottom forming an Apple where you could see some sort of breakout in Apple. So you can always see a pullback. Let me see. I got this right here. It's possible Apple make new high. Yes, it is possible. You could come somewhere up here and you could break out. The alternative is that you see some sort of like a pullback and where you form that cup and handle formation. So something I'm looking at for Apple is that it's some sort of move that way. Either you pull back, because where Apple is heading right now, your Apple is currently heading into, sorry about that. Apple is currently heading into resistance area where it's very likely you could see some sort of pullback on Apple. So you could still move up an Apple and then get that pullback, retest 260. But if you start dropping, it's very likely you come down an Apple and you retest this key area over here where you have a lot of support sitting. So that will be somewhere around this area at the bottom here. You could come down an Apple and you could form that cup and handle formation. Very likely to do that and then break to the upside. So that is something I will feel more comfortable if I'm to jump into a long position, it's not going to be here. I either want to see a pullback, find some sort of support, and then push back to the upside. If I see a pullback, obviously I want to see these level here get hold right over here. I want to see this key level here get hold in Apple, which is around that 250 area to 248 area. Or you take from the bottom here and you do your fibs. Yeah, somewhere between this level here, the 618 to 0.786 level, you hold, and you do that like cup and handle, and you just move up to the upside. But going long on Apple here, probably not ideal. But again, you continue to break to the upside, and that is when you come back and retest that level. You continue to sell down. Depends on what the market does. I would be careful because of where SPY and QQQ is. Like VIX is at a demand zone. SPY and QQQ is at a supply zone. So I would still be cautious going long anything. So yeah, that's Apple. AMD. AMD held its 200-day moving average. Still have a gap at the bottom here. So can you still see that gap? Yeah, close. Yeah, AMD still have a gap over here. So going into this week, I will be looking at this resistance level here on AMD because AMD have this resistance level right over here. So I would be looking at this resistance level here to see any sort of pullback. Because if we get a pullback at this level here, I would expect, and this level here, the previous all-time high, is right over here, is where AMD is above. AMD is above this level. So at least I would want to see some sort of reaction where if AMD could come back down, fill this gap, if it's going to move back up, reclaim this level here, and then push the upside. That would be an ideal situation if you're bullish in AMD. The alternative is AMD. Obviously, the most bearish case scenario is you roll over and you fill this gap all the way at the bottom here. This would be the most bearish case scenario for AMD. Not sure if this is likely, but never say never because that's possible. But for now, not a stock I would go long for long at the moment. I want to see some sort of reaction to fill this gap at the bottom here in AMD. Amazon, most likely scenario for Amazon is that you have a 1, 2, 3. I could see one. You need one more wave to the upside for a fifth wave, and then a retracement. At least I would want to see that happen. But I want to see this level gets filled because at this level here, you're in a supply zone in Amazon. It's a major supply zone that you're in on Amazon. Lots of buying that took place here as well. So at least I would want to see the price come back down within this level and fill this gap. This here, obviously, if you look at this, is a major key resistance level. So not a place you want to go long. I want to see some reaction to come back down and retest this key demand zone at the bottom here and fill this gap. So that's what I was looking. I'm going to be looking for is the price to retrace. So a lot of stocks and ETFs, they're in their supply zones. So there's some opportunities to see some sort of selling happening this week. I think if we get a little bit more upside and then a rejection, if we're grabbing liquidity. Okay. For Google, I'm not really going to be taking any trades on Google. We do have a gap here. But what I want to see in Google is this weekly resistance here. That's a pretty strong resistance level. Google is like right into major supply zone at the top here. So where you can see some selling is around, if Google is holding this 317 area, you could see a little bit more push to the upside in Google and then a rejection off of this weekly 330 area into this sell zone here before you see some sort of downside. So I will be paying attention to this level here in Google, where you could probably just move up if you don't do it now. If Google don't come back down right now and test this level here, and then push back up. Well, the other case scenario is that Google hold this level, come up here, reject, and then fill this gap. And you can even reject and come back down and test this level, and then move to the upside. In a bullish case scenario, at least I would want to see that happen on Google, and you could probably just create some sort of like that kind of inverse head and shoulder pattern or so on Google. So that's for Google. That's NVDA. rounding top for NVIDIA here. NVIDIA is approaching a sell zone. So again, seeing a lot of stocks within sell zone, ETFs and sell zones, just telling me just to hold off in a long position, just wait for a retracement. Obviously, market could rip, but there's a lot of uncertainties with news right now. But I'm seeing a lot of sell zones up here where prices are in resistance level. So you could still reject off of this level here and just come back down a little bit because you still have this gap to get filled. So at least I want to see this gap get filled. And you can still continue to move down and retest this level if you're going to break to the upside back or not, which is this level right here. You could break down to. That's how the bearish case would play out. Bullish case is that you held these level here and you continue to move up, but not a place I would want to go long. This is a place where I'll be looking for some sort of reaction for a short position, if anything, intraday. Let's see what else we can look at. Look at Tesla. All right, so Tesla's completed a 5-wave move to the upside, 1, 2, 3, 4, 5, and you're seeing that retracement happening on Tesla right now. Tesla had a gap right over here. That gap has been filled as of last week. So Tesla filled that gap, and you're seeing some sort of retracement. If Tesla breaks this 338 level, the next level you're going to see Tesla hit is this 319 level. I did post in the Discord. The monthly chart is what concerns me on Tesla price action because Tesla could certainly go lower. Let me see if I could find that for you guys. But one of the levels I've been looking at is that you have this level over here, which is 367, which is a major resistance level because you got sold off right here. Let me just pull that up so you can see it. This level right here is where price got rejected. So this is a major resistance level, is a level where Tesla got sold very hard. Right over here, rejected our level. And until you break above this level, you retested it and you continue to move to the upside. You came back down again. You never came back to this level entirely, but you continue to move up. And then Tesla came down here and it broke this level once more again, a level that's been acting as a resistance. Then you finally break it and then you come down and you rejected that level. So that will be a major level I will be focusing on, is that 367 level, because once you broke a resistance, broke below a level that was acting as support, and especially if it was a resistance level in the past, very likely is going to act as a resistance level again. So I will very much pay attention to this level. Above this level here, 367, is this level right here, which is that 382 level I will be paying attention to, 382 to 390 something, because here's where Tesla found some support. And Tesla found support here, but it finally broke that level and it rejected that level, came back up, reject that level again, 382, and broke right down. So you got a lot of resistance level here in Tesla. So you got to be very careful because Tesla has major resistance level. Something I posted in Discord, let me see if I could pull that up for you guys really fast in Tesla, what really concerns me in Tesla. Okay, so I posted a chart in the Discord, what I'm looking at, and I talked about what I'm really looking at for Tesla. Let's move over to the next chart. And this is one of the things that concerns me as well. This here is Tesla's daily chart. You have a crosshair of the 50 crossing down from the 200-day moving average. This is the EMA. This is called a death cross when the 50 EMA is crossing below the 200-day moving average. Major level here, which was a supply zone, acting as a resistance zone. You broke below this level and now you're trying to retest this level here again. So if you retest this level, you fail to hold this level, you break below this level again, and you break below 338, I expect Tesla to have more downside to 319 area I'll be looking at. So you could come lower to 319. Now, you did have a death cross over here back in April 2025, and Tesla was pretty much a lot down away from the 50 and the 200-day moving average, and you're seeing the same thing here. So whenever you have a death cross, you expect continuous selling a lot of times, but because the overall market rallied, Tesla did not drop more. That drop, the bottom was already in after you have that death cross, and Tesla continued to rip to the upside. This is April 2025. You're seeing the same thing here again. So whether or not this is gonna play out where it's like, okay, news is in, we have peace in the Middle East and with the US, and Tesla have the same thing happen here, where it's like you're seeing that that death cross, but you continue to move up. One of the things you see here is that as Tesla was finding a new low, you did have bullish divergence MACD and bullish RSI divergence at the bottom here, as you're having a double bottom, or you're forming a slightly lower low over here. Now we're back at this level here, but I am not seeing the same bullish divergence forming on this chart. Matter of fact, it's still MACD is still forming lower lows. RSI is still trying to decide what to do. So it's not exactly the same setup yet. So I will be looking to see what price does here, because if you reject this level, you're going to roll over on Tesla and you're going to retest that 319 level and even lower. Now, the other thing that concerns me on Tesla is you guys could read the chart. You just pause and you could just read my notes in the chart here, which I have. You're in this. This is the weekly chart. You could come back down and you could retest this level here, which is about what is that, 250 area. You could still come down and retest this 250 area, or this 200-day moving average in the weekly that's just below $300 level. You could come back and retest, and then you could find support on the volume profile and then move up again. So you could continue to roll over here, come back, retest the bottom of this trend right over here around this 250 area, which is more of a bearish case scenario, and then you could continue to move up again. This is the weekly chart. On the monthly chart, you have a bearish MACD cross. You're seeing bearish divergence forming on MACD. You're seeing bearish divergence forming on the monthly chart. That's on a macro level. So you have think of it as an entire cycle trend up. You're in that rising wedge formation. So if you start breaking this rising wedge, very likely Tesla's going to have a pretty bad couple of months to the downside. I am not calling for that. I'm just letting you know every situation, the bullish and the bearish situation on everything. But overall, Tesla is still setting up, especially if you're rejecting that 367 level, it is setting up for a bigger pullback to around that 319 level at least, which is where I will be looking at. And if you're seeing that, it is still possible that you could see more downside, especially with this bearish cross on Tesla. Especially if you start failing to hold the monthly 50-day moving average and you're breaking these levels. But I will be looking at that 319 level if you're rejecting 367 or so. So you have the bullish, the bearish case scenario that I've given you. Take trades based on these key levels. The way I trade is I look at the key levels. I may have a thesis or a bias to say, okay, the chart looks a bit more bullish, the chart looks a bit more bearish, but I have my levels. So if something has been invalidated, I will change my position on a trade. So pretty much that's it for this weekend update. Yeah. Have a wonderful trading week ahead, guys. That's it for now. Take care. Oh wait, before I take care, I think there's some people who requested I do Microsoft and Meta, so I'm just gonna cover Microsoft and Meta really fast. For Microsoft, really quick, I don't know if the bottom is in for Microsoft. I see 1, 2, 3, 4, 5 wave to the downside. Pretty much in wave 5, I see wave 1 wave, 2, 3, 4. We could see one more wave to the downside here on Microsoft. So not entirely where I think Microsoft bottom is in. You could still see one more wave within the blue box, anywhere within the blue box here. So I don't think the bottom is in yet for Microsoft, but I could be wrong. Still, the key level we're looking at for rejection here is this 386. If you start failing to hold 378 on Microsoft, very likely you could see more downside, especially you have this trend here that is forming right here. If you start breaking this trend here, you could continue to see more selling, but you could still see some push up on Microsoft, if anything, and then a breakdown to the downside. So what that will look like is something like this, where if you hold, I'm just saying, if you hold this trend, you can see a push up and then break to the downside here. Something I'm looking at for Microsoft. For Meta, let me just. Okay. Yes. For Meta, pretty much key level I'm looking at for Meta here is you had a WXY level, pattern forming. You have ABC, then two ABCs pretty much. What I'll be looking at for Meta is that you either bottom here for Meta, but if you haven't bottom, you're going to continue to see this gap gets filled, and anywhere within this range here, or retesting 383 for Meta. So there's still possibility for Meta to see more downside, but at least I want to see these gaps get filled. So key area going in this week for Meta is this, you're in a sell zone right here. So not an area you want to go long on Meta. You can see some sort of reaction within this level, and you can see some sort of reaction that fill at least one of these gap. So that's what I'll be looking at for Meta, is what kind of reaction we get within these level over here. So that's it pretty much. A lot of gaps that needs to get filled in major resistance level. So not a place I would go long. Overall, I would be looking for any reaction for short positions or so. At least I want to wait and see what the market gives me before I trade. Here, if Meta start moving up here, it's a better short on a risk reward basis to see any sort of pullback on Meta. All right, guys. Finally, that's it. Sorry for the long video. It's now, what, 41 minutes, 42 minutes. All right, take care. Have a wonderful trading week ahead. Bye.